Boris Johnson suffers a case of electoral dysfunction, the Great British Pound appears to be showing major signs of weaknesses, and more. I'm Michael Smalis, and this is World Wild Economy. Right, before I get into more news, the indices for this week. So the S&P 500 rose 2.4%, the Nasdaq Composite 2.2%, and the WIG 20, the 20 biggest Polish companies, fell about 1%. So as you can see, there's been a bit of a rally this week. I'll get into more of that in just a second. But firstly, I'd just like to talk about my blog and kind of content structure behind what I'm doing. And I've essentially revamped it. I've changed a lot of my things. Investingintellect.com is looking a lot more fresh. World Wild Economy is now more of a column than it is just a podcast. So every week there's going to be some major analyses with graphs, with different kind of aspects other than just written word, which I think is very beneficial for essentially the consumers, the readers, you can say, as well as some other things. So, for example, Trump's tweet of the week. I'm going to be picking out a tweet that I liked, or that kind of struck some interest in me every week, and I'm essentially going to analyze it. I'm going to tell you the truth behind his tweets, give you my take on some things. This week, I'm going to be talking about essentially whether or not American consumers are getting a discount on imports, as Trump has suggested so, and essentially my take on this whole thing. Anyways, that is just a quick announcement from my side. Recommended reads for this week, some news and headliners. Trump's tomato trade war deal averted the dreaded 2020 scenario. It's a great article by Bloomberg talking about Trump's recent deal regarding Mexican tomatoes, essentially. So I think Mexico is the greatest or biggest exporter of tomatoes. And there was, up until recently, Trump had a 17.6% tariff on their tomatoes. So obviously, it's a big tariff on their main exports. And him kind of reverting that has obviously paved the path for greater economic relationships and more trade, which he kind of, made a point of which at start now he's reverting some trade kind of protectionist policies in regards to trade wars that he's having with many countries, and he's again paving a path for more economic relationship, more globalization again, going back to the kind of stage where everyone was quite recently. Anyways, great article, certainly recommend it. It's a very interesting read. I wasn't even made sure of the kind of tomato tariffs, you can call them, that Trump had placed on Mexican tomatoes recently. Anyways, there's been a whole lot of stuff happening in the news recently. Honestly, I've had a crazy busy week. I've been catching up a lot of the news, but again, it's a lot to do with the Great British Pound, the US-China trade war. It's kind of the heart of this show. Anyways, just a quick clip that actually my mum suggested to me of Boris Johnson, you can say, answering a question on the street, which he got asked. You can check that out.
He's been speaking for the last 6 weeks since he's been elected, and he's said nothing. You have said nothing for the last 6 weeks. You've gone into Parliament and you've played games.
Well, actually, that's not true at all.
Completely true.
Well, it's not true at all. We are on the verge of getting a deal. We will get a deal.
Right, so from this clip, I'm not really here to make fun of Boris Johnson. I think he makes a good job of that by himself anyways. But my point of this is in regards to politics and politicians. Now that I'm going to be taking more of a kind of political perspective, or introducing more of a political perspective into these shows, because it's an integral part of this show, essentially the international economics behind this. Essentially, my point is you need to watch out for these two things when listening to politicians. So let's say if they begin their answer, or if their answer is essentially you're wrong, or you don't know anything about the subject, then they don't know anything about the subject themselves. It's a very untruthful answer. You need to watch out. It's a crazy red flag when people just deny. This is even just politicians. When people just deny someone else's arguments based on very little, when they just say just a statement, they give the point, no explanation, no evaluation, no analysis, whatever. I mean, we were taught this in preschool, middle school, high school, whatever. If they do something like that, they're lying. Second of all, if a politician acknowledges the question, they say, "Oh, that's a great question. Thank you for asking. It's a very important topic," and they kind of babble on this for 20 seconds. They're full of shit. So essentially, just these two red flags that you need to watch out for when looking at politicians talking about economics, talking about whatever the hell issues they might be talking about, it's very important to know whether or not their answer is truthful, especially now that I'm talking about Trump's tweets in regards to the economy, in regards to tariffs. It's something, again, that I'm watching out for, and I suggest that you do as well. Anyway, so the kind of main story of today, and something that I've written about in my column, is the Great British Pound, or, you know, as I name my column, the not so great Great British Pound, or I named my specific piece this week. Anyways, the pound was one of Tuesday's most prominent stories, making worldwide headlines. I always mess this up, after pushing below the $1.20 mark. So essentially, the $1.20 mark was a revisioned post kind of referendum floor for the Great British Pound in respect to the US dollar. And as such, you know, with the kind of Forex market being focused around technical analysis, you know, they've got a lot of floors, ceilings, there's quite a lot of psychology in this. It essentially leads to more higher selling pressure on the Great British Pound, which is, as of now, around 5.06% down year on year against the US dollar. Anyways, the Great British Pound has seen a falling purchasing power, obviously, when the currency gets weaker in respect to all other currencies, ceteris paribus, its purchasing power falls. Even amidst economic uncertainties in the US, you know, there's actually been a manufacturing slowdown, first time in 3 years, within the US, as well as the economic turmoil happening in East Asia. So even though a lot of essentially economically bad, you can say, things are happening around the world, the Great British Pound is still falling in respect to that, because remember, currencies are always in respect to one another. You can have kind of basket indices to look at the kind of general strength of a currency, but then again, just because something happens in Britain doesn't mean the British pound is going to go down in respect to another country. Something else has to happen in another country as well. So let's say if all things are kept the same in another country, no ceteris paribus, then it's going to fall down. But let's say if, you know, something is happening in both the countries, which is economically bad, you know, essentially the currencies might stay at a similar kind of ratio to one another. But yeah, that's essentially just some simple economic theory. I hope I made that clear. Anyways, even though it has since Tuesday, actually, in Tuesday it kind of breached that mark, it has regained some of the losses that are made there. The preceding extraction of capital from the UK and Boris Johnson's unforeseeable political stunts foreshadow a further wave, or waves essentially, of currency depreciation to hit the shores of Great Britain. So essentially, just because, again, like I said, there has been a bit of a rally on the Great British Pound recently, in respect to the US dollar. I think a lot of other currencies, especially the currency of Thailand, they have seen some strong rallies against the US dollar based on, you know, manufacturing activity, all that kind of stuff. It has still, I'd say from my perspective, got a lot of losses to see in the foreseeable future, essentially to experience in the foreseeable future. So actually, I'm looking at my article on my column right now. Essentially, I've got a graphic here showing the sterling that it, you know, hit its basement. Obviously, the kind of floor that I was talking about, the $1.20. But essentially, what does this all mean? You can have a look at my column. You can check out the kind of graphics. I've taken some from Financial Times, etc. Very interesting. But essentially, what does this mean? I mean, this is kind of the important part of all this. I mean, we know what's happening, but now we need to really analyze the situation and gather some information, gather some analyses, and, you know, analyze what's going on. And that's exactly what I'm going to do here. So, in essence, a cheaper pound makes the Britain's holidays abroad more expensive. Briton, I guess you can pronounce, essentially the British people's holidays abroad much more expensive. You know, dollar-denominated debts suddenly becoming a much more severe cost for businesses and more. There's a lot of crazy impacts which you can talk about, but mainly it's the imports of any kind that are, you know, essentially less kind on the wallet. And with many products, you know, goods and services, less of them are going to be appearing in stores. Actually, fresh produce from Spain has been diminishing in availability in London, in shops in London, across London. And it's something that I've actually talked about on a previous show, podcast, whatever, from my personal experience, especially experiences of my family, since they live in London. They're experiencing this kind of impact firsthand. Nevertheless, there is a silver lining, well, maybe not for the British, but maybe for myself, you know. For myself and other EU and international students, you know, from the perspective of a student, that's what I'm going to be talking about. University is cheaper, essentially. I mean, the money earned over the summer, you know, let's say I'm working a job right now, I'm intern at PwC at the current moment, my summer money, or the money that I've earned from the summer here in Poland, is going to buy me more pounds when I come back than it would have, let's say, a year ago or even a month ago. To be honest, there's been a big downward trend in that currency. Anyways, you essentially have more pocket money. Take my friend, for example, whose parents live in the UAE, so the United Arab Emirates. They send money over in dirhams, that's their national currency, and that currency is actually pinned to the US, I believe. And so in the end, he is in full benefit of the exchange rate being a few percent higher or lower, depending on the way you look at it, than it was last year. From an investing perspective, actually, the drop in UK equities, from a foreign perspective, so for example, an American or Polish investor like myself, will be amplified through the kind of side-by-side fall in the Great British Pound. So for example, let's say we take company X, whatever that might be. It's a British company. Let's say their stock falls 10%, and US dollar, Great British Pound exchange rate falls 10%, so your pounds are buying you fewer dollars, or your dollars are buying you more pounds, let's say, that falls 10%. Then the stock for an American-based investor, let's say, it actually appears it is 20% cheaper. That's why, for example, Warren Buffett has been gathering a sizable cash pile, to say the least. It's over $100 billion US. I think last time I reported on it a few weeks ago, it was $122 billion US, just sitting in cash in the pockets of, let's say Berkshire Hathaway. It's crazy. And he's been collecting some of that cash. He's going to definitely spend some of it. And he's been talking about spending money in general, investing in UK equities. So I guess, let's say, there is a silver lining for some. Anyways, this week's Trump's tweet of the week, it's actually a new column that I'm going to be starting. I think I mentioned it at the start of the show. It's essentially a column where I'm going to pick out Trump's tweet, and I'm going to talk about the truth behind it. So in this week's edition of Trump's tweet, or Trump's tweet of the week, whatever you might want to call it, I pick up where Trump left off on the impact of tariffs on US consumers. Are they getting a discount? Trump certainly thinks so. I'm actually going to read out his tweet right now. So, the tweet reads, or let's just say the main part: tariffs will not impact American consumers that much because the Chinese currency has gone down, which gives our importers a discount. Importers can find supplies outside of China. Absolutely worth it. We don't want to be servants to the Chinese. This is about American freedom. Redirect the supply chain. There is no reason to buy everything from China. Right, so essentially, that's kind of what I talk about this week. I'm going to go over a few of my points, but essentially, Trump isn't wrong in this case. I actually talked about this in one of my previous podcasts. So essentially, when the tariffs increased the prices of US imports from China, a falling Chinese or a depreciating currency, Chinese yuan, Chinese renminbi, is going to bring that price back down. So you got to look at the comparative impacts. How much has, let's say, the tariff impacted the goods that you purchase from China, and essentially how many percent has the Chinese currency gone down in respect to the US dollar? To look at the comparative change, see whether or not someone's getting a discount or not. It depends from whose perspective you're looking at, the kind of elasticity to the price of imports, exports, whatever you might be looking at. Which might cause you to buy fewer or more imports from China. But the problem with this, which I really highlight in my column this week, is the fact that, you've got some tariffs which are obviously placed on some Chinese goods. So, for example, namely steel and aluminium. I think that they were one of the first actually tariffs. But the Chinese currency, it applies to all goods. So essentially what that means is that all the Chinese goods appear much more cheaper, not just to US consumers, but to everyone around the world. Ceteris paribus, obviously, if it only goes down, because I know that, for example, if the Chinese yuan strengthens in respect to another one, that's going to have in respect to another currency, that's going to have the opposite effect. But essentially, when we're looking at the US and China in a bit of a vacuum, that's kind of how it appears to be. And so obviously at the beginning, Trump's kind of initial agenda for the protections policies that he's installed now, the tariffs, was to direct his funds, or essentially the purchase of US consumers, from China to elsewhere. But obviously a discount incentivizes more kind of consumption of Chinese goods abroad. So, US importers of Chinese goods. So it's essentially, you can say, a self-defeating argument, or a point really. It's at the very least confusing. So I really recommend you check out my column on Trump's tweet of the week. I think it's very interesting. I also show you to what extent the Chinese currency has to keep going up, or essentially losing its value in respect to the dollar, to offset Trump's tariffs. It's a very interesting graphic, and again, very interesting commentary. I'm just giving you some quick notes of what I talk about this week. A pinch of politics. Again, a new kind of piece on my column. I've really constructed this column to be a holistic, or somewhat holistic, you could say, take on what's going on what has been going on this week in politics and economics. Since obviously I'm talking about economics, but politics, it's so intertwined in international economics that I simply can't stay away from it. Obviously, I like politics from a certain perspective, but at the same time, it's very important to talk about it and then take out the economic kind of information or implications from what's going on and talk about that. Anyways, I'm still going to make fun of Boris Johnson, obviously. Right, so Boris Johnson's case of electoral dysfunction. Conservative Party leader Boris Johnson's Brexit has trouble staying hard, and he's struggling to get an election. So that's my little joke on kind of the situation of Brexit and Boris Johnson's government. Essentially, the Tory party in the UK, so that's the Conservative Party, has experienced Boris Johnson's political blows to his own members, wanting a hard no-deal Brexit and vowing to purge all Tory rebels. So those are Conservative Party members who oppose a no-deal Brexit, or essentially oppose what Boris Johnson is saying, and they're voting against it. That's essentially who he has vowed or promised to purge from his party. And essentially, Boris Johnson had the kind of UK government had a few important votes recently, and by a margin of handful of votes, I believe it was somewhere in the zone of 20 votes, Boris Johnson lost both of the major votes this week, and he's essentially having a hard time pushing through his idea of a snap election with which now that he's got a minority government, since recently one of the Conservative MPs moved to an opposition. I think it was the Liberal Democrats, so that is more of a left-leaning party. In respect to the Conservatives, I believe they're a bit moderate, not like Labour. Essentially, it doesn't sound like a calculated kind of plan on face value, obviously. Anyways, a Tory implosion might be on the horizon, and it begs the question, is Boris Johnson playing a clever political game, or is he playing a child's game? Anyways, that's where I'll leave you off this week. That's a kind of summary of what's been going on this week, my take on things, my invitation to my new column. Obviously, I've been doing Worldwide Economy for a few weeks now, but I'm really diving deep into written analysis on my blog, investingintellect.com. I certainly recommend you to check it out. I've revamped it, all that kind of stuff. Trump's tweet of the week, new edition. I think the content that I'm writing right now will be very beneficial to many. I've had a lot of fun writing it. And certainly there's a sizable amount of content for people to digest and just read someone's opinion on. Really, obviously, I'm bringing up the facts, I'm telling what's happening, and then I'm also giving you my take on it. So it is by no means some form of journalism. I'm not simply reporting the truth. I'm saying what's happening and saying what I think of it. Anyways, you can check me out on Instagram as well, Investing Intellect, website investingintellect.com. This has been Worldwide Economy, and I wish you a great week. I'll see you soon.